Today on Quickly Quantum, the week Quantinuum turned its first earnings report as a public company into a genuine Wall Street spectacle. Record revenue, a surprise Oracle Cloud deal, and a stock chart that looked like a rocket launch. Before that, in the headlines, a sector-wide earnings reality check that split the winners from the laggards, Congress and the Pentagon still pouring fuel on the China quantum race, and a handful of stories that never made a weekday slot, a superconducting heat engine, a Pfizer-backed drug discovery framework, and a $2 trillion crypto warning. Welcome back to Quickly Quantum, your daily brief on the quantum frontier. It's Saturday, August 15th, 2026, which means it's recap day. We're running through everything the 5-day show touched this week, plus the stories that slipped through the cracks entirely. Let's get into it. Let's start with the week's biggest storyline, Quantinuum's first earnings report as a public company. Second quarter revenue came in at $8 million, up 279% year over year, and ahead of the $7.6 million analyst consensus. Then, days later, came the Oracle news, a multi-year deal putting Quantinuum's Helios trapped ion system inside Oracle Cloud infrastructure, which sent shares up roughly 22% in a single Wednesday session, putting the stock on pace for its largest one-day percentage gain since its June market debut, with another pop the next day. Quantinuum's own account on X touted the results, saying, quote, "We demonstrated strong execution against our strategy, announced strategic partnerships with industry leaders, including Oracle and HPE, and reinforced Quantinuum's leadership in fault tolerance," end quote. Tech commentator at Evan Kirstel framed the cloud logic simply on X, quote, "Almost nobody is going to buy one of these outright, so cloud access is how quantum gets any real usage," end quote. But at NetCreate, a quantum networking and security analyst, pushed back on X, arguing that the headline sounds stronger than what was actually demonstrated. And the caveat that matters, the Oracle deal hasn't produced recognized revenue yet, and Quantinuum remains a loss-making company with operating losses widened by IPO stock compensation. Hype check, a 6. The revenue beat and the cloud deal are real, but the skepticism about what's actually improved technically has a point, and the stock's pricing in Oracle money that isn't booked yet. Washington kept the funding drumbeat going this week too, all pointing at the same rival, China. Multiple reports this week tracked lawmakers eyeing boosted quantum funds, U.S. lawmakers reportedly pushing higher defense spending on quantum, and a bipartisan congressional push to increase quantum research funding. None of this is new music. It's the backdrop against which states like Utah and New York, and partners like Oracle and Quanta Computer, have been layering their own quantum initiatives all year. And it connects directly to the earnings story you just heard. Every one of these companies is, directly or indirectly, angling for a piece of that federal spigot. Here's the honest caveat, though. Lawmakers eyeing funds and bills pushing spending are not the same as appropriated dollars. Nothing here is signed, sealed, or sitting in an actual budget yet. So call this a mobilization story, not a money story. Washington clearly wants a bigger stake in the quantum race before Beijing pulls further ahead, but the checks haven't been cut. Now, one more earnings story that deserves its own spotlight, Infleqtion. The neutral atom quantum computing company posted record second quarter revenue, up 116% year over year, and raised its guidance to $43 million. On top of that, it disclosed a $100 million letter of intent tied to the CHIPS Act. Infleqtion's own account posted on X saying, quote, "Infleqtion was honored to host U.S. Department of Energy Undersecretary for Science, Dr. Dario Gil. We showcased how our neutral atom quantum computers, precision quantum sensors, and SuperStack software platform are delivering capabilities for governments, corporations, and research institutions worldwide," end quote. Investor at Quantum Bull HQ was blunt about the fundamentals on X, arguing the company's revenue growth makes the story more de-risked than ever, with neutral atom positioned as a leading modality. Now, a letter of intent is not a signed contract. That $100 million in CHIPS Act money still has to be finalized before it's real. But paired with the revenue growth, this was one of the stronger earnings stories of the week, and it barely made a ripple outside the sector press. Zoom out to the whole sector, though, and the picture gets messier. Call it the earnings reality check. Infleqtion actually bucked the broader trend, gaining 5.58%, while IonQ and Quantinuum wrapped up their own strong quarters. But Quantum Computing Inc.'s print landed with a shrug. $5.6 million in quarterly revenue against an $11.8 million loss, and the stock barely moved, up just 0.06%. Physics PhD and investor at Q Investor Notes summed up the divergence on X, noting that once earnings started rolling in, the sector split apart, and adding, quote, "The market seemed to care more about revenue and outlook than bottom-line earnings," end quote. Wall Street stayed split on the group overall, and on top of that, Wall Street Zin slapped QUBT with a strong sell downgrade this week. One earnings season, a deeply split sector, and at least 3 very different stories. Here's a story that never got a weekday slot, and it might matter more than any stock chart this week. Researchers from Quantinuum, NVIDIA, and Pfizer published a validation of something called GenQ AI, Generative Quantum AI, a framework that stitches together classical high-performance computing, generative transformer models, the same family of AI behind large language models, and quantum computing itself, to automate the design of quantum circuits for molecular ground state preparation. In plain terms, figuring out the lowest energy, most stable configuration of a molecule is one of the genuinely hard problems in drug discovery, and doing it by hand, circuit by circuit, doesn't scale. This framework has AI generate those quantum circuits automatically, aimed squarely at pharmaceutical research and development. What makes this notable isn't the technique alone, it's the byline. Pfizer, an actual pharma giant with actual drugs on actual shelves, co-authoring a paper on quantum AI hybrids is a different kind of signal than another qubit count press release. It suggests real industry appetite for these tools, not just quantum vendors talking their own book. Now, the caveat, and it's an important one, this is a validation paper, not a deployed pipeline. Nobody's discovering a new drug with this yet. It's a demonstration that the pieces fit together, which is an earlier stage than it sounds. But paired with everything else this week, the Oracle deal, the enterprise spending story coming up shortly, it's another data point in the same direction. Big, established companies are willing to put their names on quantum-adjacent research. Scientists this week built something that sounds like science fiction, a quantum heat engine. Stay with me on this one. A heat engine, in the classical sense, is just anything that turns a temperature difference into useful work. Think a car engine turning burning fuel into motion. This one does the same job at the quantum scale. Researchers built a tiny superconducting engine that successfully converted heat near absolute zero into useful work, demonstrating the first cyclic quantum heat engine of its kind. Why does a physics curiosity like this matter for the machines we talk about every day on this show? Because cooling is one of the ugliest, most expensive bottlenecks in scaling up a real quantum computer. Every superconducting qubit needs a small forest of microwave cables running down into a dilution refrigerator to control it, and those cables are themselves a source of noise and a hard limit on how many qubits you can physically wire up. The pitch here is that a future version of this kind of engine could run autonomously inside the machine itself, potentially cutting down on exactly that kind of cabling. This is a cooling and scaling problem we've bumped into before on this show in various forms, and it's one of the quieter reasons the roadmaps from every major hardware player keep looking further out than the qubit count headlines suggest. The honest caveat? This is a lab demonstration at a very early stage. Getting from, we made a tiny engine work once, to, this is integrated into a commercial quantum computer, is likely a multi-year jump if it happens at all. But it's exactly the kind of unglamorous, foundational physics that tends to matter more in 5 years than any single benchmark announced this week. Then there's the Wall Street Journal's enterprise adoption story, which fits right alongside the earnings news this week. Mainstream businesses are spending real money on quantum computing well before the technology is ready in any traditional sense. The Journal reported that Allstate's CEO is publicly telling other executives to get on the train now rather than wait for quantum to mature. That's notable phrasing coming from an insurance company, not a quantum vendor selling optimism. It's an insurance executive telling peers in other industries not to be caught flat-footed. And insurance is a genuinely sensible place for this urgency to show up first. Pricing risk is fundamentally a massive optimization and simulation problem, exactly the kind of thing quantum algorithms are pitched to eventually help with. Now, here's where I want to be careful, because this is exactly the kind of claim that's easy to overstate. Businesses are spending big on quantum at this stage of the industry usually means exploratory research and development budgets, pilot programs, proof of concept partnerships, people figuring out where the technology might eventually plug in, not production systems making real underwriting decisions today. Still, put this next to the Oracle Quantinuum cloud deal from earlier in the show, and a pattern starts to form. The on-ramp for enterprise quantum use isn't buy a machine, it's rent access through a cloud provider you already use. And CEOs outside the tech industry are starting to say that publicly instead of quietly running pilots in the background. Fortune ran a piece this week under the banner of the Great Quantum Migration, and the number attached to it is enormous. Over $2 trillion in digital assets, the magazine says, are at risk as the industry pushes toward post-quantum cryptography, the new generation of encryption designed to survive an attack from a future, sufficiently powerful quantum computer. The idea, in plain terms, is that today's encryption, the stuff protecting cryptocurrency wallets, banking systems, and plenty of what you do online, relies on math problems that are hard for classical computers, but that a large enough quantum computer could, in theory, crack. The migration is the industry-wide effort to swap that encryption out before such a machine exists. This ties together a handful of threads that surfaced separately this week: the Google and Algorand Bitcoin vulnerability story, and Tron activating NIST standard post-quantum signatures on its own network that never got pulled into one story until now. Here's the skepticism this show always brings to numbers like $2 trillion. That figure is a projection about assets that could theoretically be exposed someday, not money that's actually at risk today, and timelines for a quantum computer capable of breaking real-world encryption remain genuinely uncertain. But the fact that Tron is already shipping NIST post-quantum signatures and that researchers are already publishing Bitcoin-specific vulnerability analyses tells you the migration itself isn't hypothetical. Companies and protocols are moving now, well ahead of any confirmed timeline for the threat. Last one for the week, and it's a nerdy but important bookend. Two Japanese industrial giants, Mitsui & Co. and Mitsubishi Electric, published joint benchmark results running the quantum Fourier transform, a core building block algorithm used inside everything from Shor's factoring algorithm to quantum simulation, on Quantinuum's 98-qubit Helios trapped ion system. They ran benchmarks executing both approximate and Steen-encoded logical quantum Fourier transform circuits on the system, Steen-encoding being a method for building one error-corrected logical qubit out of several noisy physical qubits, spreading the information out so a single error doesn't wreck the calculation. Running both versions lets you directly compare the near-term, noisy approach against the error-corrected approach on the same hardware. Exactly the kind of apples-to-apples data the field badly needs and rarely gets. Worth noting, this landed in the same stretch where Q-Control claimed to push an IBM-based QFT circuit past the 100-qubit mark. Different hardware, different company, same algorithm, same month. That's not a coincidence so much as a sign that QFT benchmarking has become the industry's shared yardstick right now, the way people used to argue over raw qubit counts. The honest caveat is the same one that applies to basically every benchmark story on this show. This demonstrates capability, not a practical industrial application. Mitsui and Mitsubishi Electric aren't using this to solve a real business problem yet. They're establishing what the hardware can currently do, which is valuable, but it's a data point, not a deployment. Still, when two companies that size are willing to put engineering time into benchmarking someone else's quantum computer, that's its own small signal about where industrial interest is heading. That's the week. A genuine earnings breakout for Quantinuum, real revenue growth at Infleqtion, a sector split wide open by results, Washington still chasing China, and a few quieter stories on cooling, drug discovery, and crypto that deserved more than a footnote. If any of these headlines resurfaces on Monday, you'll have the fuller story behind the number. Follow Quickly Quantum wherever you listen, and if someone in your life keeps asking what's actually happening in quantum, this is the episode to send them. This has been Quickly Quantum, an AI-voiced podcast, created and built by a real human using today's cutting-edge technology. Nothing you heard on this show is financial advice. I'm Brian Lambert, and I'll catch you all tomorrow. Take care.